Panic selling in the market has started, and today we'll break it down for you. Where is the market going? Well, if you take a look at the charts, things are not looking good for Bitcoin right now as we are trading at 86.4 at time of filming after multiple days on a downward trend, and current sentiment right now not looking good on Bitcoin or the crypto markets in general. One thing to consider is whether or not we're starting to see a crypto contagion with ETH falling below 2,900. All right, so when you look at one other factor that plays into this is the digital asset treasuries. This, of course, is kind of talking about it right here is where they are unwinding. Many people are kind of pushing back on that. Why do these DATs need to sell or buy back shares when Michael Saylor doesn't have to? He doesn't need to yet. If he gets too bad, he will have to. That's the real question that everybody's asking, because we are looking at some severe pain within these digital asset treasuries. One, of course, is the infamous Tom Lee starting to take on a certain amount of pain right there. And if this continues for Ethereum, if we do see it continue to push down and we do enter a true bear market, how does this portray on strategy, at least, for how these DATs will start to move forward? I think this is the factor that everybody needs to consider right now. I would say that, first of all, I don't think they're Ponzi's, but I do think that they need to have a strategy that has something more than just holding an asset. And everybody's talked about this. We've had several on our show that have talked about this, is that multiple strategies for income producing within these treasury companies. In many cases, they don't even call them treasury companies. Those are the ones to be on the lookout if you're going that direction. Other news, you had ETH backed loans now on Coinbase starting to move. You can now use your ETH as collateral to borrow USDC. And a lot of people might be saying, well, I'm going to wait for Ethereum to get into a position where it could bounce. And that is a loan entry position. If you guys want to do that, of course, you can jump over to Coinbase.com, sign up there using our link. It's just really easy. Click that down below. And let me know what you guys think. Are you doing any kind of crypto loans as the market starts to come down? Because as the market starts to move in a downward direction, is that the time for you to maybe look long term? Because a lot of people have these horizons that are 3, 5, 7 years out. Do you think Ethereum's going to be up in 3 years? Do you think Ethereum's going to be up in 5 years? I think you might agree with me, yes. Other things that are going on right now, I want to go to this headline real quick, because this gets into some kind of the macro side of what's going on within the administration. The Education Department is restructuring, but it doesn't involve student debt. And this is a problem, because if you look at one of the things that they're focusing on in this article, they're attempting to hollow out the U.S. Department of Education. And a couple of points within this, student loan borrowers have faced even more problems in the private market. So if they end up taking that student loan debt and doing something in the private market, this could be a big problem going forward, not only for the administration, but I think from an economic standpoint, a big hit overall, because borrowers saw their complete debt balloon with no end in sight due to a lot of loan mismanagement. So not a good sign right now when it comes to student loans and the Department of Education. With that happening, one thing that you kind of have to consider is that what caused the S&P to take a massive rally down. This is 2.5% in 80 minutes, guys. Not normal for the S&P 500. If we have that occurring with what's going on with the Department of Education and the restructuring of some of these major government facilities, what happens when we start to float around the issue of healthcare? Because that's one of the biggest issues that I think is facing our administration right now. And remember that healthcare was kind of dangled out there by Mike Johnson during the closure of the government, and they still have another closure coming up very soon that's going to have to handle a reopening. And the Republicans were the ones that said we have a plan, or we have the ability to talk about a plan. I don't think any of that has actually occurred. So again, just a kicking the can down the road. This is not bullish for any of the markets, and I think they're starting to show that. One thing that is bullish, though, is NVIDIA reports $57 billion in revenue. This is higher than expectations kind of had it. This was a great meme right there. And that's what I feel like, is that right now Jensen is definitely protecting the entire economy, because it is one that is starting to get a little bit edgy in the overall markets. Big tech firms rise after NVIDIA's results ease fears of their AI bubble. And I don't know, do you guys believe, or which side do you fall on? Do you fall on the AI bubble camp, that this is overbought, oversold? Or do you lie on that, no, this is an up-only trajectory? There's a lot of analysts out there right now, and a lot of investors I know that are very, very pro. Now, granted, their time horizon is 3, 5, 7 years. And if that is the case, if you're thinking whether it's Alphabet, Amazon, Meta, Apple, all of those starting to move up, if that's the case, then maybe this is the trade for you guys. NVIDIA earnings takeaways was really a concern because a lot of people were concerned about not only the issue with China, but also this kind of circular motion of where one company gives loans to another to buy their product. This has been done before in industry, but it's kind of interesting because it does hit a little bit closer to home. There's been a lot of talk about the bubble. Wong said, from our vantage, we see something very different. And he should say that. This is, of course, Bernstein saying that perhaps the AI trade is not dead yet. Other things that are being looked at right now, the company has orders of 500 billion in AI chips for 25 and 6. So again, this may take some time to unwind a lot of these data centers that will going to continue to contribute to the economy. A lot of these orders that have already been somewhat paid for, at least booked in terms of revenue. And I think this will be the thing to watch as we start to see all of this go into 2026. Now, Ray Dalio says maybe there's a different angle on this. Listen to this clip.
I think the real issue is who owns the stock.
Okay.
Is it in strong hands? Not just one stock.
Right.
Isn't it amazing we're talking about one stock for the stock market bubble and we're talking about for the economy bubble. So you have such a small percentage of the economy, such a small percentage of the American population in terms of wealth and so on, concentrated, and everybody in it and in a leveraged way. In various ways, it has leverage.
What are strong hands? How would you define that?
Weak hands would be the public.
So retail investors are weak hands.
Right.
Strong hands are the owners of these companies.
Right. In other words, strong hands is that they primarily invest their own money. You don't have public, right? The weak hands is largely, let's say, a leveraged public. And all united about that. Yeah. That's one of the key ingredients of a bubble. Right. So it's not just pricing. Wealth can't be spent. In order to get money, you have to sell wealth in order to get cash to get the money to buy things. And so when that happens, bubbles burst. So bubble bursting means, let's say, a tightening of monetary policy is classic, but also something like wealth taxes can happen.
All right, so Dalio hitting on a few points there. I think he is right, is that with NVIDIA right now, which is dictating the market, the real question is the stock in the right kind of hands in terms of long term. Of the analysts I'm talking to, everybody is still very pro AI, seeing this as a long-term trade. And I think the real question is what is that split? If we see more retail and we are starting to see a little bit more of a crack in the economy, could we see retail finally in a position where they might say, hey, listen, I'm going to unwind this trade? That, I think, gets into this whole issue around the Fed, because this is another factor that plays into it. Here's a Bloomberg analyst. Take a look.
That the temporary pullback in stocks is not the bursting of the AI bubble. We expect the AI bubble to inflate significantly further into 2026. We don't know the exact timeline of when it's going to burst, but it does not appear we're close to bursting yet.
If we don't get a Fed cut in December, is that a problem?
I don't think it's a problem, first of all, because they won't cut unless, it's clear they need to. I'm not convinced that it's obvious they need to. At some point, obviously, when the US economy slows down hard, they're going to cut super aggressively. I don't think they need to be going for a preemptive cut now, and I don't think the US economy is careening off a cliff edge just yet. So therefore, I don't think they should be cutting. I don't think it's a problem. One of the things that fueling valuations is that we are always, under Trump administration, going to get Fed policy which is too easy for the economic fundamentals, based on orthodox economic policy, and that helps asset prices. But the AI bubble is its own theme, and it's more dominant, and we're at the inflation stage of incredible capex spending, which benefits some of the big names out there.
All right, so there you go, guys. This is getting very dicey, because I think you look at what the AI bubble could comprise of is a lot of major companies that apply into this, and this even would, I think, bleed over into stocks like Tesla. Obviously, what's happening with Meta, and of course, even Google and Alphabet to a certain extent. The other things you have to kind of consider is how is the economy doing? Well, jobs are usually the number one indicator for that. U.S. Department of Labor finally published their September jobs data, and this was a little bit surprising because it's up. And this uptick of 119,000 non-farm payroll jobs, this was adding 50,000 above expectations, was a good indicator. The real question is will this lighten the load for the Fed on them being able to do a cut in December, if in fact that they do a cut in December? And that, I think, is the real question that everybody's asking. I'll show you a poly market on that here in a second. Charlie Bilello basically said total number of jobs in the U.S. increased by 0.8 over the past year, slowest growth since 21. But in the past 50 years, this is the type of weakness in the jobs market that has preceded recessions and a spike in the unemployment rate 100% of the time. This is the problem that we are looking at right now, is unemployment. If we continue to see this, because this might be one of those things where you just get a small move and we still have a downward trend. Remember, we had not been collecting data for almost 50 days. So all of that playing into where we are now. I want to go over to another one because this is whether or not we need a rate cut despite this kind of good data coming out of the BLS. Take a look.
Is it strong enough that it doesn't need assistance from the Fed?
Well, I think the president has been pretty clear on this issue. We did see the 2 rate cuts. I think the Fed does need to go ahead and cut again. You know, when I travel around the country talking to businesses, which I have hit 36 out of 50 states on my 50-state tour before, the Democratic shutdown happened, those business owners are wanting to borrow more money at a cheaper rate to invest in their workforce. That is what they're asking. And so I think another rate cut is exactly what we need to really grow this workforce. I mean, we see GDP is up 4.2%. I think that that's positive growth, and we want to see more private sector jobs come online. Out of the 119,000 jobs, we saw 97,000 of those jobs have been in the private sector, which is way different than the Biden administration when we saw they were all government jobs. So I think we're on the right track.
All right, I think this is a very critical time, guys. We are dealing with a unique position in a market that has been somewhat depressed overall, inflation continuing to rise. And I would agree with the Department of Business there, and that is around how businesses are looking at growing. And most of them are, in most cases, looking at trying to add capital. And the way you add capital typically is taking loans. But you want to do it when loan rates are much lower. And that's what we're seeing. That's what I'm seeing out there within a lot of the people that we're having discussions with all the time, is these small businesses want this to be able to grow. And this is a factor that plays out. Here you go. Let's take a look at Polymarket. Polymarket, of course, drove way up here to a no change at 76% and then had a bit of a reversal, possibly due to this jobs data, maybe down to 63. The real question is do we get the quarter coming up? Because there's the quarter coming up to 36% after dropping down to 22. So getting very erratic right now, as many of the market makers do not really understand where this is going. Anthony Pompliano, we're in a generational bull market because our central bank and politicians can never stop printing money, and this is eventually going to be the case again with QE. It is coming, guys. Fiat is definitely not necessarily the angle here. You know what to do in terms of how do you protect against this. Other points that I want to kind of hit on is how does this play out into the retail holiday? Because there's 2 things that will give the economy at least a feeling as though the market is starting to turn, or at least the inflation numbers and the economy is starting to turn around, and that is the holiday period. Usually it's going to be in retail sales or it's just in consumer sentiment. Take a look at this clip.
Now, the duo have a different expectation than Lawrence about when consumers will shop, specifically 15 times between November and January. And this is based on a survey that Kohl's did last year about the average number of store trips that shoppers took during the holiday season.
Store trips, not just buying online?
Not just buying online.
15 times?
Stores, on average.
My guess, based on what you just told us, is that this holiday season is going to be a pretty good season for the shoppers because they're not worried about inventory. They have a lot of it. And they are reading that, oh, shoppers are responding to bargains, which basically means shoppers are training them into putting sales back on.
He said if we run the same promotion this year that we ran last year, we're getting a higher take rate. Is that maybe they'll run that promotion, but maybe it'll be for 4 days instead of 10 days. Or maybe it'll be on a specific item in a brand, but not the entire brand itself.
Yeah, I don't know about that data because I'm talking to a lot of CEOs with national chains, and they're telling me that the number of foot traffic visits they're getting is dropped off dramatically over the past 90 days. And this is starting to become a waterfall effect. Into the end of the year is the real question. If you look at some of the publicly traded restaurant brands and chains out there, you've seen a massive fall off in places like Chipotle and many others, almost looks as bad as the crypto market in terms of how these stocks are performing. And you look at that indicator, which usually is an indicator to retail. I think retail is going to have to get very aggressive on pricing to be able to lure buyers in. And that is going to translate into lower numbers for these publicly traded companies, meaning Q1 performance is not going to look good, as well as Q4 performance in terms of profits. So be on the lookout for that, because that, of course, translates to a lot of the investments on the traditional market, which translates into how they play that into risk markets. Bitcoin hits its most bearish levels in the bull cycle, and has it ended, guys? Let me know what you guys think. Treasury companies have basically stopped buying. Some have actually even sold part of their holdings. This is something that will be usually an indicator that we have pretty much hit the end of the cycle. What would be a catalyst strong enough to accelerate Bitcoin and demand? Major developments seem off the cards. You can see this with the Strategic Reserve. Clarity Act has been moved back. And remember, we did a whole video on this that was, I think there was like 10 to 12 catalysts that had to occur for it to move the market upwards. Here was the video. This was our time codes on it. And I'll kind of hit on some of these. Catalyst for the bull run. Shutdown uncertainty. It had to be able to end at a certain time. It didn't. We also had to get at least a win by the Dems. And of course, that was a question mark. Then, of course, you dealt with the healthcare crisis, which still has not been resolved. Then we get into the situation around the Clarity Act. You also look at consumers under pressure, no real relief in sight. And then, of course, you've got tariff deal catalysts. Would that happen? No real news on that. Then you're dealing with quantitative easing. We've seen at least quantitative tightening indicated as when it's going to start, but we haven't seen any word of how easing the Fed balance is going to change. And then, of course, you're dealing with things like Clarity Act, which has clearly been moved now into 2026. The one I'm watching right now is we cannot have a delay on the ETH upgrade. If we have a delay on the ETH upgrade moving into December, that could be bad for Ethereum in general. So far, AI and NVIDIA has been the only thing that has been holding this market up. And even to that effect, we still had a 2.5% S&P 500 sell-off in a very short period of time. So times are looking pretty interesting right now. This was a poll we did over on X. And the question was, if Bitcoin rallies back to 100K, I will do this, and I'm holding a Bitcoin bag. Either I would dump my bag, dump half my bag, or wait for an all-time high. That's what basically the audience is saying, is that they're waiting for an all-time high. If you compare this to the 2021 fall off after the all-time high, that was a 52% downtrend to the bottom of that little bit of a loop. And this occurred right there in February of 22, okay? And if you say, all right, well, that is the relief rally potential coming out of that. If you were able to hold that long, if you did, and you bought that bottom or held through it, that was your percentage right there, 41% in the short relief rally before we started to go into the bear market. Let's take a quick look at other tokens that could be in that same boat. And this, of course, is Solana during that range, 84% on the relief rally before it started to move down. Obviously, that was more of an FTX scare. But even XRP, which is now trading below $2 for the first time in a long time, well, since last year. And if you look back on that period of time, you saw the bump that we saw in April of 2021, that going down to the bottom in July of 2021, which was preceding the Bitcoin all-time high, and then a skyrocket in its relief rally to the high, which was 125%. So these are similar times, and I think that would be a comparison if you do have a handful of tokens. The real question is, do you weather through this storm and hold them, or do you take profits? Because I think a lot of people are in that position right now. Or maybe you're in a position where you've had a lot of gains on one token, like a Bitcoin or an Ethereum or an XRP, and you already have taken profits, and now you're trying to figure out whether or not you position into a tax position of maybe dealing with tax losses and tax harvesting strategies. So there's a lot of things that you could go with between now and the end of the year. Of course, all of this depends. I think the big catalyst will come on December the 10th, and that is whether or not we get a Fed rate cut. So you guys make sure and watch for that. We will probably be doing that live for you. Make sure that you're in the Diamond Circle. Very easy to get additional content from us. Click the link down below. It's absolutely free. Hit me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.